Let's analyze together HIM and HERS Health Long-Term Analysis 2025-2027 Fundamentals, Technicals, and more. Remember, guys, this company, read disclaimer right here, obviously, before that. So HIMS and HERS Health, it operates in telehealth consultation platform. So it connects consumers to healthcare professionals, enable them to access medical care for mental health, sexual health, and dermatology and primary care. So the company was founded in 2017, so kind of, a new company. And right now, it's very interesting to know that, because the net income was negative over the last 5-6 years, and now it's in positive net income. Here you can clearly see the net income in quarters, and the last one was around 50 million. In September 2024, it was more than 75 million net income, which is very important. When you buy a stock, and this type of growth is the ideal thing. It's like you see that the numbers are improving little by little, and the explosion of the net income, it happens when you see like such good results. There is like a quarter that is gonna be like completely exceptional, or just is gonna continue to grow steadily, and that's the important thing. We don't see here negative net income since I would say June 2023. So the last 2 years have been really, really great for this company. And the thing here is like it's gonna continue. If we go to the forecast right here, we're gonna clearly see that it's like in the annual forecast is very amazing. We're talking about like by the end of 2025, it's gonna be 0.68 of net of EPS, earnings per share, which is related to the net income, obviously. And the next years are gonna be even better. We're talking about that by the end of 2026, it's gonna be it's gonna have an EPS of 1, and you guys, you can clearly see here it doesn't deviate too much. Obviously you see like a huge deviation. That would mean like you cannot rely on the analysis of these Wall Street analysts. But in this case, we're getting like very similar numbers right here in 2022. The very same number. Here the report was a little bit worse, and here is a little bit worse also, but just by a little bit, by just a point. But here the scenario is gonna be very clear. By the end of 2028, it's gonna be nearly 2 of EPS, $2 of EPS, which is actually 4 times more than the current levels that we saw last year. So this is very important, because right here you see the analysts thinking that the stock should go down average minus 25%, but I don't agree a lot with this analysis. Maybe for the short term, because obviously it went up a lot, but the thing is like if we see such good forecasts, it's gonna continue to go up, but obviously we have to draw the lines. I'm gonna actually activate the logarithmic scale so you can clearly see better, the trend lines. So the logarithmic scale is important, because to assess the growth steadily, because if you see the automatic, just a normal chart, you're gonna see that it's gonna go like it's going like crazy up, and the thing here is like if you draw the line right here with a logarithmic scale, it's very clear to see the trend, the downtrend and the support level, and the resistance level right here. So I'm gonna just adjust this, and these are the levels that we had, so probably the stock could go up to 140, and this is the main resistance level, or it could go back to $35, which is the support level, so it's gonna be trading sideways. Look at that. You are talking about a lot of volatility during this time. This is the problematic thing with the stocks with a small market cap. It has only 14 billion. It's not too small right now, but it's not too big. We're not talking about Apple. It has $3 trillion. So, and the thing here is like we're talking about like a possible scenario of going up 100% or 90%, or going down right here minus 40%. But the net income, as I said, is very good. So I don't think we're gonna see like a very huge drop right now, especially because look at the estimate that we have right here, 0.15. So 0.15 is a little bit worse than the previous one, but it's better than the one seen back in February 2025. So probably it's gonna be trading around these levels. I'm gonna adjust it right here, based on the EPS that we have here, the EPS forecast. So probably something around that. It's gonna be trading around $80 and 45. This is the probably scenario that we have right here. More news that we have. Let's actually study the seasonals right here. And the thing here with seasonals, I would say, it's going like completely crazy this year. But over the last 5 years, you can clearly see the trends. And this is very important because when you buy a stock, well, we were talking about negative numbers at the beginning. The first 5 years of this company were kind of horrible, but not so horrible. The losses weren't so high. And look at that. Even though the company was in losses, there was only 1 year that was horrible, which is 2021, minus 58%. But the rest of the years, and this is very important, to assess the trend, and it's like, look at this, on average, absolutely great. We're talking about like 2024, 150, 2025, in this current year, 154 currently, which is insane. And 2020, 47, and 2023, 40%, almost 41%. So that's another bad year. 2022, minus 5%. But on average, this stock performs really, really good, the fundamentals are good. The technicals also look good. And you guys remember the support levels that we have right here. So don't be afraid when you see the stock going back on $30 or $35. Because that particular level is, in terms of risk management, is the best. Those, for instance, right here that bought the stock in April the 7th in 2025. We're talking about like they got actually very good performance. It's like 150% in just a short period of time. So that's great. Yeah, it's better to buy at the bottom instead of the top. It's like right here, those who bought the stock at $71, that particular level, it was the worst at that time. It's like after a huge rally. And that's the problematic thing. I don't like this particular level because it's not super overbought, but it's not oversold. I prefer oversold levels, after a correction or something like that. And maybe it could happen when we see a general market crash. It could help, especially after this news that we received about the US getting involved in Iran. If we see that correction, it could create like a good opportunity to buy the stock, at a lower price. So we had to be patient. For trading, we had to be patient to find the best areas to buy. So what do you think about this one? Do you think it's a good one for long term or not? See you in the comments below.